Up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Welcome back to NinjaTrader Live. I'll be your co-host or host for this segment, Tom Schneider, CMT with NinjaTrader. And on Traders Workshop, we like to bring in our ecosystem partners. This week is no different. We have returning guest, founder of MasterTheMarkets, Tiro Nagapan. Tiro, how are you doing today?
Very good, very good. Tom, yes, it's beautiful. At least the sun is out. It's always a bonus in London. I don't know about you guys, but
I don't think, you know what? I think I've been to London once when it was sunny, mostly been in like the wintry months where it's been a little bit darker. But yeah, when London is sunny, it's a great, it just makes the city even better. I should say that.
well, tell me about it. Yeah, everything comes to life. It's incredible.
Yeah. Yeah. So how have you been?
Very, very good. In fact, I was just telling you just before the show started, I think about, us all meeting up in London, going for a drink with Gavin as well, and then yeah, watching the Euro Cup. Hopefully you can make it. Let's see how it goes.
I'd love to. I'd love to. London is one of my favorite cities outside the US. If I have to travel somewhere, London is just comfortable and cozy, but a lot to offer. Been to the British Museum. I've been to several times. I love it.
Me too. Yeah, it's a very well diversified country, so I really like it. Yeah, awesome.
Yeah. So today, I think we have a really neat topic today. Managing market volatility, which is funny today because it doesn't seem like there's a lot of volatility today in anticipation of tomorrow. But I think it's a good time to check in on that.
Absolutely, and I've been preparing for this so as to give really good value to the audience. I think before we delve into it, just a little bit of recap maybe would be a good thing to do,
Sure.
isn't it, Tom?
I
Right?
like it.
Yeah, so I think from the previous segment, so that we don't go too much into the previous ones, the viewers can go and watch back the previous videos. So in our first one that we did, the epic video where we got 25,000 views, and I know Jim doesn't like, but I'll tell some good things about Jim later on as well. Don't worry. So,
Right.
so we talked about the three stats, right? That actually the structure actually gives us, so people can go and watch that. I'll go into one of the stats a bit more closely today. Then in the second one that we did, and as I said, I'll tell good things about Jim as well. Jim is catching up really fast, 13,000 views in 1 month.
Oh,
We
great.
just did, yeah. He's well behind on it. So that one here, we talked about market structure, right? And how we develop the market structure, which gives us actually the three stats that we spoke about in the first video. In fact, it really received some really great comments as well, where people were saying it was one of the best videos that they watched. Then the last one that we did, which was just 2 weeks ago, which is catching up really nice momentum, 1,500 views in 5 days. We talked about the different types of targets people can put, right? Based on how much move is left in a swing or a trend. So today then I thought it would be right and apt to talk about where to put stop losses. Because the usual thing that people usually get, Tom, and correct me if I'm wrong, is they got a nice target, right? But as what Anthony was also saying before as well, that they're not able to know when to get out, right? Or where to place the stop loss to know that their trade is invalidated and the swing is changing. Sometimes they hold it too long and the losses get bigger, right? Sometimes the stop loss is too tight. It stops them out and then races towards their target. So I thought that it would be really good in this video, we go a little bit more into stop losses. And whenever we talk into stop losses, then naturally we will talk about volatility. That was my train of thinking. What do you think about that?
I think that's great. And, you know, kind of, I just want to touch upon the last video that we did talk about. You had those, that spreadsheet up with those kind of time horizons there. What I really like about that, and it's worth a look, is kind of you find out where your most efficient path to whatever you're trying to achieve is, right? So you can find the demarcation point where, you know, whatever percentage you're looking to get out of a move or out of a trade, you can find like how far you can go. And then if you go a little farther, the return isn't as great, or the probabilities really get reduced. So I like the way the data is presented. Earlier, Tiru, I was saying on the stream how I don't like data sets. I don't like to look at numbers, but this is one of the exceptions I'll make, because to me, it's so clear where, you know, here's the optimal 25%, and I'm just using your numbers, 25%, 60%, 100%. You know, you get a sense of where you can set your targets, so to speak, before there's like a really big drop off and it's harder to achieve. So I just wanted to touch on that, you know, reminding me what we talked about last week, but totally agree with understanding stops. And we did experiment with actually changing our idea about a stop or changing our idea about a trade earlier. And we just had another trade that we trailed our stop. But there's always that thought that what we saw when we put on the trade might change, and therefore we need to change with it if that's the case. If the trade doesn't go as planned, how do we change too? That's part of that equation, I think.
Spot on. I think we set the tone really very well, because I think that's the real question, isn't it? When does the trade change, and when does your trade get invalidated? Where do I put that stop loss, or how do I trail it? So let's take something, for example, we'll start with real time first, right? And so in real time, I'm just taking a look at gold. I mean, we don't have that much time, so I'll just take one instrument for now. We use the daily time frame, which is what we used the last time as well.
Sure.
Imagine this for now, right? So according to our market structure, it is saying it's a downtrend, right? Because we got the swing highs and swing lows quantified, which we have talked about in the previous videos. I don't want to go too much into that. So if you take a look at this, I mean, it did a compression here, right? And then the last big red bar here, which was instigated by the non-farm payroll news last Friday and unemployment data. Then it took out that low, and then it turned into a downtrend, right? So some people out of that, I mean, even though they don't have their market structure clearly defined, even if they took an impulse trade based on this big fat red bar, they would have probably entered it somewhere around in that red bar, maybe here, maybe there. Or according to us, we would do it quantitatively, which is on the close of the bar, right? Now, the stop loss then, that's a big question, isn't it? Some people don't know where to put there's two types of stop loss first for the viewers, right? One is called the initial stop loss. Now, where do you put it initially? Then the second thing is, how do you trail it so that you still give it enough room for the trade to get towards its target? That's the main thing. And when it hits your trailing stop loss, theoretically, it should tell you that your trade is invalidated. I'm changing direction. And that's what Anthony was saying. If price could talk, what could it say, right? So that's what your technical level should be actually doing. It's a way of telling you that the price action is talking, so that I'm changing, hey, you know what, listen up, I'm changing direction, you know, so get out, right?
Right.
So how do we now determine those levels, right? That's what the audience wants to know. Now, you see, for example, if you had placed your initial stop loss there, you know, stopped out, but, you know, some people say, if you just want to take it very crude, some people say, you know what, I want to train my stop loss at the high of every bar, right? Now, what would have happened out of that, right? So if you did that, you would have trailed it to the high of that blue bar, right? This one here. And today you would have got stopped out, right? Makes sense, right? Now, the people who got stopped out today, they might, sometimes, if you're not very clear why they trailed it there, the biggest fear is what? Is, I hope I'm right, because if I'm not, what if the price then goes down aggressively tomorrow or the day after? Then any normal human will think, oh man, I shouldn't have trailed it too tight, right? But on the other hand, which is what we spoke about before, what if it did go up further, up against you, right? Then those guys who then trailed it here tight might be thinking, oh, I did the right thing, right?
Right.
Yay! I didn't lose much more. But you see, as you and I know, Tom, I mean, trading is based on probabilities, right? So as if it's based on probabilities, we don't want to be doing guesswork and just be holding on tight to say, hey, I just hope it becomes a green bar so that I'm right. So how do we systematically, and quantitatively answer these questions? The only answer is through probabilities. Now, so let me show some probability stats. Now, this will tie in with all the previous videos that we did, which I just showed, the 25,000 views, 13,000 views, and all of that, which people can go back to. But as I've just mentioned, just as a short summary, which is to get probabilities, we need a market structure, right? This is what we have got with the help of the quant traders back from the 1960s, which we have talked about before. So leveraging of really big experience and computer power. Now, when you got a market structure like that, then you can derive the three stats, what we have spoken about before. One of the stats is, which will help me decide where to put my initial stop loss and how to trail it so that it's based on probabilities. So let me show you something here, and then we can look at some examples from before so as to drive the point quite clearly to the audience, okay? So let me pull up this stats table here on gold, right, that we have got. So the main thing what we are really looking for, let me push this in this way here. The one we are really looking for is what we call the maximum adverse excursion, right? So now maximum adverse excursion, in other words, just tells me how much volatility, how much does it move against me? So if, let's say, if I were to enter a particular trade on here, which is the blue line here, now to get to my target, if I were to draw a target over here, right? Now, how much does it move against me, right? So this is basically anything that goes below the blue line is moving against you, right? Which you will
Right.
see in your open profit as a loss, isn't it? As an unrealized loss, right? So over here, it's still going against me. And then finally, let's say then it goes towards in your favor and goes towards the target. So in this example, how much has it gone against me? Is the maximum has gone against me, is the low of that red bar.
Mm-hmm.
And the distance of that low of the red bar from the blue line is what is the maximum adverse excursion, right? So in this instance, let's just say maybe it's 50 points. But that's only for one swing, right? For one trade. So this table here has collected all of these trades over 10, 14 years. So I did it from 2010 all the way to now, which is over 14 years, right? And you can do this on NinjaTrader because we programmed it on the NinjaTrader as well with the indicator. And this tells me that this is on a daily time frame, and we can do this on any time frame altogether as well. But just taking a look at daily, we can see that there are 387, trades that we are looking at, 387 swings or dots, if you want to look at it that way. And I can see usually what we have seen in the testing is that take the 98% number. So that's a good one over there. So 98% of the time, it's moving against me. So if I were to take a look at that blue line again, where I enter, it moves against me 40 points, right? It moves against me 40. It's 400 is 40.0. So for the viewers to understand, which is $40, it moves against me $40 before it gets towards my target or towards the top, if it's a bottom to top move, right? Before the race ends. So what I would do from here is, okay, now you see, Tom, objectively and quantitatively, in my mind, I know that supported by data, right, over a large sample size, I can now place my trade in a place where I can be peaceful, even if it hits me. I know that 98% of the time I won't get stopped out. Maybe if I do get stopped out, it's only 1.2% of the time, and what to do? That's trading. I got to move on. and take my numbers out. So you see, now if I were to apply that into real-time data, I can now confidently, on a real-time price here, on the close, right? Which is, if I bring up the data window, if I want to, that's my quantitative nature coming in to be exact, which we don't really need to be, but doesn't matter.
Right.
So 23.25 is the close, right? So 23.25 plus $40, that is about 23.65. So I would place my stop loss at 23.65, right? Which is about here, right? And I know to myself that 98% of the time I won't get stopped down. Now, the only question that sometimes I get from viewers or from clients is that, Tiru, but okay, the stats is good, we like it, but how do I know it's going to reproduce? Now, the answer to that question is twofold. One is, okay, you got a large data sample size, has a high probability it will reproduce. And the other reason that can give you confidence, you monitor in real time. The more and more you place trades, you're not going to get hit by the initial stop loss, you will start to build your confidence on that data, which is what has happened to us over all these years. So that's on the initial stop loss. I mean, is that more or less making sense?
Yeah. So basically what those numbers are doing is saying, okay, if you give yourself a stop loss of this many ticks, or in this case, 400 ticks or 40 points, then 98% of the trades you take, or I'm sorry, 90% of the trades taken, if we had looked back 14 years, would not have been stopped out. That would have been enough breathing room for your trade to stay alive and acquire the target, right? And so, as those numbers get bigger, you're going to see slight increments. The 98 becomes 99.1 or 99.2. Eventually you'll get 99.9% or even 100%, but that's ridiculous because you would never trade that way. And so if you wanted to, the trade-off becomes the probability of getting hit for you sacrifice or you gain, points in your stop, so you don't get dinged as much if your stop is hit, but you trade off the probability, or you lose the probability that it won't get hit, right? That's the trade-off.
Spot on. You know what? I mean, the one of the best things I like about in this interview, and I do it with you, Tom, you're one of my best students. You just get it straight away.
Well, I like numbers.
Yeah.
and it makes sense. Here's the thing. This is the initial stop loss, right? That's what you mentioned. And I think what's really key is the trailing stop as well.
Correct.
And I have my thoughts about what you use as an example. So maybe we'll switch to the trailing stop loss.
Good point. I was about to come to that.
We can discuss that, because I think that's, just as important. Once you've got that initial stop loss in, you're kind of protected, right? You've got your protection.
Right.
But
so let me do on the trailing.
Yes.
Right. So because I'm just thinking about time as well, I just want to give the best value to the viewers over here, right?
Of course.
We've got about 6-7 minutes left. So we got the point of entry and initial stop loss, right? Now, how do we trail it? So for that, let's take a look at an example that has happened before. So let me cover everything else, right? And let me just move on to here. So here, what we got. Okay, so the same example here again, right? So I got a signal to go up, right? This is in an uptrend, right? Took out the last swing high. The dot came, bottom came up. According to our structure, point of entry on the close, we keep it consistent, as I spoke about in our previous interview. Stop loss, you see, it can either go for the swing low, or I can use my stats, right? And we know that it's 40 points, right? Whichever is smaller. So that's what we do. So from here, 22.28 all the way to here. So I would say that if I were to quickly do that, I think we can use the ruler function, isn't it, over here? So ruler function here in here. So how much is that one there? That's about 39.60. So I would use the swing low, right? I know you like me getting all this quantitative stuff.
It's about the same, but you're right.
Yeah,
it's
right.
The better of the stops, right?
Correct. That's right. Yeah. So let me do that. How do I remove this very quickly? So remove. Yeah, there you go. So yeah, so I've got that one there. So I put the stop loss for the swing low. I'm comfortable in my mind. Initial stop loss is covered. Now let's keep going. Now, how do I trail my stop? So then I move forward. You see, look at that, right? So it went against me immediately, right? At that point, of course, people can get worried. You know what? Is it going to hit my initial stop loss? But I know, you see how I battle that voice in my mind is, hang on a minute. I know that 98% of the time I won't get stopped out. It's safe. And if I do get stopped out, it's only 1.2% of the time it will get stopped out and go up. So it's totally fine. That's a way of price talking to me, if it could talk, right?
Right.
And my trade gets invalidated. Good. So we are good so far. So we stay on because we have conviction in the stats, right? Over 10 years of data. Suddenly a brief of relief a little bit, right?
Yep.
It's gone up again, right? But to be honest, professionals don't think like that. We just think of numbers and we just run it, right? But for those who are not used to it. So then it goes up in our favor, keeps going. The main really one I'm looking at for me to get more unrealized profit and more open equity in this move, Tom, is for this top to be taken out, potential top at the moment, right? Because over here is, let's say, imagine if I put $10 a contract, whatever it is, I was up $1,000. As of now, I'm only up maybe about $200, right? On the close. Right. No, actually, I'm down because I'm below the blue line, right? So I'm minus $200, let's say. So I am waiting for this to take it out and improve my unrealized profit or open equity, let's say 2002, 2004, right? So that's what I keep looking at. So let's keep seeing what happens. It keeps going out. Okay, good. We are above the blue line. Unrealized profit is in positive. Now, oh ho, yay. I took out that top, right? And I closed a little bit below it. So still about $900 maybe up in open profit. Woohoo, right? We got more now. Now my open unrealized profit is increasing, right? 2005, 2000. Now, right, to answer the question, okay, but Tiru, hang on a minute. This is all good, but the initial stop loss is still here. What happens if we get an adverse news and it drops all the way down and I lost all that unrealized profit? So how do I protect myself and manage the market volatility? What I got to do is, we usually trail to still give room is we go and trail it to the last place it went to, the last lowest point it went to take out all the stops before it went higher, right? So what we do, we're still giving it enough room, right? So, and then we got other kind of stats to do, but I won't go through that for now. I'll just give the simple one. So here is where I will trail it to, right? So now, then I keep waiting for it. It keeps going up. Unrealized profit keeps going. At that point, if you set a target, you would have been out based on our open equity. It keeps going up. Now another red bar, right? So based on this, then I wait for it now to, that's my potential top, wait for it to clear. If it does, look at that, right? So now that's the most lowest point it went to before it cleared that top. Now let me trail it there. Good, bingo. Now we have locked in our profits, right? Open unrealized profits still going up. So this is how actually, Tom, that we would actually look at managing market volatility. Now, one way, if you don't want to set targets, but imagine if somebody didn't know that, right? And if they kept trailing it on the low of every bar, they would have got stopped out by this outsider bar, right? Or they would have got stopped out even more earlier over here, right? So here it keeps going up. Let's say if you don't set any target, and now you see that's the next one that I would trail it to, took out that top again, right? Keeps going up. Now it hit, did it hit my stop loss? Not really. If I trade, it was the low of this red bar here, still keeps going up. Now my end of the race is happening when I get that dot, when it confirms that top, which is about here.
Now, right. Tiru, why wouldn't you move your stop up to the bottom of the next red bar when you saw
actually,
that
you're absolutely right, because the reason is this potential top didn't get taken out.
Ah, okay. Got it.
That's why.
Got it. Okay.
Right. So that's how we would manage the market volatility. I know we got a few seconds left. Just a few more points I've written for the viewers is
sure.
Some people might say too, but in the beginning, you're giving up too much room for the initial stop loss. Does it reduce your reward to risk ratio? Now, the answer is very important. This took me about a few years to really understand and grasp it. My mentor was telling me this for a long time, but I wasn't prepared to listen 1 year in, 1 year out. So when we are in that zone where we are looking to look for our own things and we just don't listen to anybody. What I will tell for the viewers, very important is, you see, when you give it enough room and breathing space, even though your reward to risk comes down. This is called expected reward to risk ratio. It doesn't put any money into your bank account, right? This just is the breathing space. What you're really interested in is the actual reward to risk ratio, what really happened, right? If it doesn't hit my stop, right, this will be a total big profit trade. And in my actual reward to risk, this will be a profitable trade. This will be maybe $3,000 of trade. So my actual loss, maybe on some, when I traded like that, maybe it might be only $500. So I actual reward to risk ratio, maybe I've got a 6-to-1 or 3-to-1. This is what people need to focus on. So your expected might start as 1-to-1, but actually, because of that, you give it enough room, they all end up more profitable, less losers, average loss comes down, you might end up with a 2-to-1 or 3-to-1 actual reward to risk ratio strategy. That's one of the points I wanted to give. And the last thing is that when you give more room for volatility, as we just showed it live over here, when you wait for that potential thought to be cleared, you see, rather than trailing it for the low of every bar, you can ride more unrealized profit and more open equity.
So it's almost like a combination of trailing. When you're trailing the stop, you're also still thinking about giving it room to breathe, like you would an initial stop loss, but it's not quite the same thing. It's also being trailed up, so you're moving with the move, but you're allowing it to breathe as well.
Spot on, Tom. Absolutely. I think you summarized it well. I think finally what I want to say is, but you can't do all of this with a quantitative structure or with confidence. In your way of saying that if price could talk, that's where I would have gone out. You can't do all of that without the first step of having a market structure. And to get a market structure is what we spoke in our previous videos, which is quantify your tops and bottoms, right?
Yep.
Without that, because this entire thing, how I trail the stop loss, is based on potential tops becoming confirmed tops or not.
Right.
Right? That's the whole logic. And that's why, the quant traders were very smart in doing such framework that can go a long way and makes absolute logic and sense. And that's why we are the main exception for you when it comes to stats, right? Because it's so logical when we look at stats in this way.
Right. No, Tiru, this is excellent. As always, thanks for coming on. I could, have a million more questions, but this really has kind of changed my way of looking at stops. So I'm going to try to practice that in my example trading going forward. But where can people reach you, Tiru?
Yeah, the best place I would say for people to really understand this framework and methodology, what we have done, and use it in any of their strategies is go to 7steps to ctp.com, right? Which I've talked about before as well. And also when they put their name, email, and number if they want to, then they can get all the 7 videos which we talked about, and we take them step by step in a methodological manner. And also on the next one, what I will also do, Tom, is that we got in 2 weeks, now that we looked at entries, targets, and managing market volatility with the stop losses as well, we'll look at a simple strategy where we can put all this together as well.
Awesome. I can't wait. And I encourage everybody to go to the website, 7steps to ctp.com, and sign up and see those videos. And I'm sure you'll spend a lot of time, learning from Tiru and what he has to offer. But again, Tiru, thanks. It's great to see you.
Such a pleasure to serve. Thank you, Tom.
And we'll do this again in 2 weeks. In the meantime, we're going to take a quick break and bring back Mike Burke for the midday wrap-up.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications.